I was thinking in Ben Graham's book, The Intelligent Investor, he spends the first couple of chapters discussing the level of the market and whether it was safe for investment. I was wondering what you'd think of the market today.
Well, we don't, Charlie and I don't think about the market, and Ben didn't very much. I think he made a mistake to occasionally try and place a value on it. We look at individual businesses, and we don't think of stocks as little items that wiggle around in the paper and that have charts attached to them. We think of them as parts of businesses, and it is true that currently we have great trouble finding businesses that we both like and where we like the managements, and find them at an attractive price. So we do not find bargains in this market among the larger companies that are our universe. That is not a stock market forecast in any way, shape, or form. We have no idea whether the market's going to go up today or next week or next month or next year. We do know that we will only buy things that we think make sense in terms of the value that we receive for Berkshire. And when we can't find things, the money piles up. And when we do find things, we pile in. But the stock market, I know of no one that has been successful at, and really made a lot of money predicting the actions of the market itself. I know a lot of people who have done well picking businesses and buying them at sensible prices. And that's what we're hoping to do. Charlie?
How could you say it any better?
Yeah, but the question is whether you can say it better, Charlie.
I think the other half of the question was about investments. Do you have any rule of thumb about when you give up on or when you realize it?
Well, again, I mean, I love it when the things we buy go down. I mean, I get euphoric. You know, stocks are down today, and I'm buying more of something I was buying yesterday. I'm buying it cheaper. Now, when you go to the grocery store and you buy something cheaper than you bought it the day before, you think that's terrific. But people with their stocks, they think that the stock knows more than they do. So that when the stock goes down, they say the stock is telling them something, you know. And what it's telling me is I can get more for my money. but they take it as kind of a referendum on themselves, you know. And it's me versus the stock. If it ever gets back to what I paid, I'm going to sell it. The stock doesn't care what you paid. I mean, you have to remember, the stock doesn't even care that you own it. You are nothing to the stock. That stock is everything to you, you know. And you remember you paid $10.13, and therefore the stock should get to $10.13 before you sell it. You know, the stock has no feelings about you. You know? I hate to disillusion you on this, but it just doesn't care. And so the only question with every stock every day, and you don't do it this frequently, is can I get more for my money someplace else? You've got a chance to be in thousands and thousands of great businesses, and their prices change all the time, so their relative valuations change. And you can make the exchange at very low cost these days. Commissions are nothing. So you can always shift from one business to another. You have a huge advantage over Andrew Carnegie. You know, when he was in the steel business, he was in the steel business, or Rockefeller was in the oil business. He could not shift over immediately to retailing or something like that. You can rearrange your business empire, which you own through that little portfolio that you have. You can rearrange that, you know, at a moment's notice with practically no cost. It's a huge advantage, which people turn into a disadvantage. There is nothing about the price action of the stock that tells you whether you should keep owning it. What tells you whether you should keep owning it is what you expect the company to do in the future versus the price at which it's selling now, compared to the other opportunities of businesses that you think you know equally well, and make that same comparison. And that's all there is to owning stocks.
There was an article in the April 18th Barron's that attempted to calculate the value behind each Berkshire Hathaway share. I'm sure you have some views on that, and I'd be very interested in your perspective on that issue.
Yeah, there was an article about a week or so ago in Barron's. The same fellow wrote an article about 4 years ago, reaching pretty much the same conclusion, and I hope he hasn't been short in between. But I would say this: it is not the way I would calculate the intrinsic value of Berkshire. But everyone in securities markets makes choices on that. Every day, somebody sells a few shares of Berkshire, and someone buys, and you know, they are probably coming to differing opinions about about valuation. I would say that I found it strange that apparently he forgot we were in the insurance business, but that's not total. It really doesn't make any difference. I mean, we don't pay any attention to what people say about Coca-Cola stock or Gillette stock or any of those things. I mean, on any given day, 2 million shares of Coca-Cola may trade. That's a lot of people selling, a lot of people buying it. If you talk to one person, you'd hear one thing, and talk to another. You really should not make decisions in securities based on what other people think. If you're doing that, you should think about doing something else, because a public opinion poll will not get you rich in Wall Street. So you really want to stick with businesses that you feel you can somehow evaluate yourself. And I mean, Charlie and I, we don't read anything about what the economy is going to do, or the market's going to do, or what anytime I see some article that says, these analysts say this or that about some business, it doesn't mean anything to us. You cannot get rich with a weather vane.
And my question concerns your comment this week about the recession and the stock market going up so significantly in April. Can you expand on where the market's going from here?
Well, I could expand, but I couldn't answer. Charlie and I haven't the faintest idea where the stock market is going to go next week, next month, or next year. We never talk about it. It never comes up. Our directors will tell you that they've never been to a directors meeting where the subject of the direction of the stock market is. We are not in that business. We don't know how to be in that business. Obviously, if we could guess successfully a high percentage of the time where the stock market was going to go, we would do nothing but play the S&P futures market, where there wouldn't be any reason to look at businesses and stocks. So it's just not our game. We don't think what we see when we look at the stock market is we see thousands and thousands and thousands of companies priced every day, and we ignore 99.9% of what we see, although we run our eyes over them. And then every now and then we see something that looks like it's attractively priced to us as a business. Forget about the word stock. So when we buy a stock, we would be happy with that stock if they told us the market was going to close for a couple of years. We look to the business. It's exactly the same way as if you were going to buy a farm a few miles here outside of Omaha. You would not get a price on it every day, and you wouldn't ask whether the yield was a little above expectation this year or down a little bit. You'd look at what the farm was going to produce over time. You'd look at the expected yields, you'd look at expected prices, the cost, taxes, the cost of fertilizer, and you would evaluate the intelligence of your purchase based on what the farm produced relative to your purchase price. Quotes would have nothing to do with it. That's exactly the way we look at stocks. We look at them as businesses. We make judgments about what the futures of those businesses will be, and if we're right about that in those judgments, the stocks will take care of themselves. Charlie?
Nothing to add.
He's been practicing for weeks.